My name is Gareth Soloway, and I was a losing trader until I mastered technical analysis. Logic and charts beat hype and narratives every time. Now I teach investors the same techniques that made me a multimillionaire. This is my trading game plan. Good morning, everybody. Welcome to my trading game plan. My name is Gareth Soloway, Chief Market Strategist here at VerifiedInvesting.com. So we had a nice rally yesterday in the markets. Many investors starting to jump back on the bullish bandwagon. We saw Bitcoin ripping to the upside. Gold and silver kind of pausing, which is a little bit of a concern. But the point here is be very careful with the stock market. Again, it's continuing to lure us into this false sense of it can never go down. And ultimately, the charts remain exceptionally bearish. And you can see this from the price action. I mean, just look at the Magnificent Seven and how they've performed. They are weak. The markets have been held up by energy stocks recently. But if that energy starts to fall, if things in the Middle East start to calm down, then ultimately you lose another piece of the puzzle. But let's get into the charts here. We'll go through it all based on pure technical analysis. This is the S&P futures this morning. So yes, we did rally yesterday. We closed right over here on the S&P, and you can see we are trading lower today. So again, interesting to take note of that. Although keep in mind, the lows from days ago, we're still talking about 120 points on the S&P lower just to retest the lows from Tuesday. All right, so that's number one. Now, again, if we look at the NASDAQ futures as well, NASDAQ futures are lower here, even in spite of Broadcom, AVGO, being up on earnings. Take a look at this, guys. Again, Broadcom reporting earnings yesterday after the bell, having a great rally, but look, it's starting to curve over. This, to me, tells me that the bigger players are saying we sell into every big pop in AI. Why would they be doing this? Well, ultimately, the answer is that eventually this space becomes overcrowded. All right. If everyone is producing more and more AI chips, eventually margins contract. And I think that's where we are right now. Now, granted, we looked at the NVIDIA chart yesterday. It still is holding a major support, just like the S&P 500. But you just want to be very watchful of the charts, because the charts will be the first one that tells us the market is breaking or that NVIDIA is breaking to the downside. All right. So again, Broadcom up today, still net from yesterday's close. But if we look at this chart on Broadcom, look at what it's forming here. So yeah, we're bouncing up here on the chart, but it is not a robust rally whatsoever, right? It's a small bounce, maybe back up into this 330-ish area, but the big level to watch is this 306 level. If we break that, that was a former gap fill. You can see the gap right there. If that goes, then we're likely headed back to 250 or so on Broadcom. Now, flipping back to the S&P 500, let's just take a look at where we are right here, folks. Let's go into that. Here's your daily S&P chart, and what we're continuing to watch from a technical standpoint is this level here. And again, we can draw that trend line. It's right at 67.90. Now, this level I've harped on for the last, really honestly, 3 to 4 weeks, saying, okay, guys, this is your break point. If we get a daily close below this, watch out. The markets would then see a significant rollover and dump. As of now, even as of Tuesday's dump, we still recaptured it by the end of the day and then bounced yesterday. But again, for me, when I look at this, what do I see? I see luring people into a false sense of confidence. Every dip, every drop is met with buying. But look, what's going on here? You have a high, lower high, lower high. And again, we'll have to see if this was a top yesterday. These are all lower highs. And in actuality, low, slightly lower low, lower low, lower low, right? So essentially, this is telling us, think about a chart as telling us through breadcrumbs, through little pieces of a puzzle that continue to kind of just give us a bias to be a little bit more careful here. And I think that's important, because when the bottom falls out, in my opinion, based on all the history, 27 years of trading, when you hammer on a trend line like this at 67.90 and it finally breaks, it's not just a small break. It's not like a little bit to the downside and then we're fine. it's a flush. It's a bigger move. We're talking 5 to 10% potential downside in quick order over the course of 1 to 2 weeks. All right, let's flip over to the NASDAQ Composite real quick and take a look at that. The NASDAQ, very similar in that, again, filled this gap here. We got a bounce. We hammered on it the other day. We got a bounce. Today, we are seeing it a little bit lower here. But watch this level. Once this one breaks, to me, that's where we head down to 20,000. So we'd be talking about from current levels, the NASDAQ, again, would have downside of about 12% when this level breaks at around 22,275 or so. All right. Now, one of the issues here, and again, this could be a short-term concern, right? For me, when I look at the markets, I'm looking at the bigger factors. Believe it or not, oil price going up, it's not because it's probably somewhat on the short-lived side, and it will impact inflation, and we're already seeing that, right? I mean, prices at the gas pump have gone up, no doubt about it, but those are not the things that keep me up at night. The things that keep me up at night is the private credit crisis that's going on right now. We're seeing a private credit collapse. There are banks that are now starting to take massive write-downs and loan losses. It's not being talked about yet, but everything like the oil pop that puts more stress on the system, it increases the damage in what's going on in that situation. So those type of issues where you see, credit card defaults starting to spike, auto loan defaults starting to spike. These are all things that, again, I'm watching in the underbelly of the market that are concerning. Now, most people are focused on the price of oil with good reason, right? I mean, if we go to oil is trading up. Again, you can see trading around $77 per barrel. Now, remember, at the beginning of the year, I said, guys, watch oil. It's going to be the best performing asset in the first half of 2026. And so far, it is just that, up 40% since the start of the year from this consolidation. And again, all I was doing here was looking at the chart and saying you have this wedge pattern that continues to hammer on this trend line that weakens the trend line. If you think about it from inflation adjusted prices, so you have silver up here, you have gold up here in January, right? You have copper up here, you have the stock market up here, and oil's all the way down here. Doesn't make sense, right? And we know, at least from my institutional time spending and working with institutions, they never want to be in cash. So they're not going to sell silver and go to cash. They're not going to sell the stock market and go to cash. They're going to rotate. And so you look at these type of factors plus the chart, and it gave me a good incentive to say, okay, oil is going to be a runner here in the first half of 2026. Now, having said that, I actually am eyeing a short on oil if we get up to about the $80 level, 80 to 81 right up here, as I do think with the midterms coming, you will see a concerted effort to bring oil back down, probably at minimum back into the high 60s or $70 a barrel. But I could even see it going much, much, much lower than that if the economy continues to weaken overall. Now, another thing that's concerning here is this. This is the 10-year yield. Now, the 10-year yield is not necessarily rallying because all of a sudden the economy is great, right? I mean, again, we certainly know that. We know that you have the mega wealthy spending like drunken sailors, and then everyone else is kind of like just struggling to get by. But what this is telling us is that inflation expectations are going higher. All right, because when inflation goes higher, what do rates have to do? What does the Fed do? They raise rates, right, to combat inflation. And that's the tricky thing here in the near term. And this is a very big move up from a low here at 3.92 to a high today of 4.14. That's a big move up in the 10-year yield. Now, having said that, we are coming into a little bit of resistance. So I'm going to be watching here. You can see these low pivots. Do we break through this level? If we do, we probably go to about 4.2% on the 10-year yield. Now, one of the other interesting aspects here, folks, is that what we're seeing is essentially expectations for Fed rate cuts are going bye-bye, right? We really are seeing that. And I want to show you this. So we're going to jump to verifiedinvesting.com's website there. Look, you get two Gareths at one time. How about that? All right, enough of that. But let's scroll down on our website, right, through all of our stuff that we have, all of the key. By the way, look at this. I have a proprietary algorithm, and when we were at 68,000 or below on Bitcoin, it was saying extreme fear, final verdict, accumulate. And sure enough, we've seen the pop, and I still think Bitcoin's going higher here. But if we scroll all the way down here, this is what I wanted to show you guys, right, is that we are now looking at the Fed watch tool, which we have on our website here. that when you bring this up, we're now not looking or expecting, the markets, I should say, are not expecting a rate cut until September of 2026. Now, remember, just literally a few months ago, it was priced in that as soon as the new Fed chair came in, whether it's Kevin Warsh or not, we will have to watch and see. We'll watch and see, does he cut? That was what the market was expecting a couple months ago in January. Now it's pushing it off to September because inflation expectations are being ratcheted up. All right, so that's something we have to monitor here. And you can see that right here. This is the current Fed funds rate right here. And it's basically saying that all the way through July, we're going to be staying here. But then in September, that's when the first rate cut is expected to come through. So again, the idea here, by the way, is that oil will have come down. And almost weirdly enough, this makes sense because we know the midterms are in November, right? So the midterms are right between this. And this is telling you that oil would have come down enough where the Fed could actually maybe cut rates by September. Now, listen, we all know the president's going to put pressure on the Federal Reserve new chair to cut rates as soon as possible. Whether or not he does, who knows? It's anyone's guess. But at least per the market, it's telling us that it's not going to be happening in the near term. All right, let's move back to the charts here and take a look. So there's the 10-year yield again, right up into this resistance. If we flip over, we looked at oil, which is up on the day again. My short level remains about just below $81 per barrel. That'll just be a starter position. Now, gold. And listen, we'll get into some stocks, but right now, gold and silver are in focus. I want to cover these. This is important here, guys. So what we're looking at here is a breakdown of a key trend line. We never were able to break out of this zone of resistance. And what kind of pattern could this be forming? This could be forming, again, what down move, inside bar, bear flag, right? So be careful in the near term. Gold, and listen, 2 candles, by the way, don't complete a full bull flag. For me to really be confident, I always look for, 3 minimum, 5 to 7 is ideal. Candles, sideways consolidation, slight incline, right? For instance, if you looked at Bitcoin, right? Bitcoin, and we could take a quick look just for educational purposes. I mean, look at how great this flag pattern was. I mean, this literally was like 25 candles. And there's the breakout on that, right? So again, just something to keep an eye on. But the point is that you just want to be aware. Essentially, we can all live in our happy bubble, in our hopium state, and just say, oh, well, we all hope this goes up or this goes down because that's the position I'm in. But in reality, what serves you best and will make you more money in life is being honest. And just being aware is important, an important part of that. So keep an eye on this, guys, right here, a potential starter of a bear flag position or situation. Silver, kind of the same thing, rejected off $93 to $92 area here. It's come down 2 candles, now getting a starter inside bar. On silver, if it does go like this and starts to fall, we know we have good support at 71 to 70. Although, again, this is the micro pattern. What's the macro pattern? What's the bigger time frame pattern? And it's still bearish, right? And the reason I say that here is because you still have this, and this is the same, just on a bigger time frame, right? So you want to be aware of that. If you go to your larger time frame here, again, even your monthly chart, well, it doesn't really look great on the monthly chart here, but the idea is, again, is that you want to be aware of this type of sideways chop, which is in the lower range of the big drop here. Okay, so that kind of gives us a midterm. And I shouldn't say long-term. Macro, the macro for me is more midterm, like let's say 1 to 3 months. Micro is 1 week to 3 weeks. And then long-term is a year, 2 years out, right? And by the way, I still remain bullish. I'm still holding my long-term gold holdings. I mean, I haven't dumped those because it's like an insurance policy against a slow-moving train wreck, which is the state of the U.S. in terms of its debt, in terms of, the fiat currency, all that kind of stuff you guys know about. All right. Let's move into some stocks that are making big moves. We already looked at Broadcom, right? AVGO here. If we look at AVGO, it's bouncing up a little bit here in the pre-market from this little bit of a downshift. If we go back to the daily chart, is there a shortable level on Broadcom? Yes, of course there is. I will be eyeing this downsloping little trend line here, which is also basically right around this area here, anywhere between 344 and 346. If it hits today, that would be a potential day tradable short, not a swing trade. I don't have a good swing trade level on this just yet, but just as a day trade of what I'll be looking for in the Apex Live day trading room. Now, other stocks making moves. This was one of my favorites I discussed with you guys a while back. I've highlighted this company, the Trade Desk. Look at this chart. I mean, it literally back in 2024, late 2024, almost into 2025, it was a $140 stock. It just continued to get rocked. Earnings, it had a gap down. Anytime you have a gap down at the lows of a chart, and on earnings, it opens lower and rallies back up and forms a green candle, that tells you smart money was buying. And look at what it did. And then look at the pop today. Whoa, it's up like 25% almost on the day after news hit that OpenAI is looking to make a deal with them for advertising. And the beauty of it is this, right? So not only was the chart, let's go back to the chart. I want to show you this bigger time frame. So if you go on the chart, the Trade Desk was trading back at levels not seen since, basically 2019, 2020. I mean, this was the COVID low in 2020 when the world was essentially ending, right? Or at least that's what everyone thought. So the idea here is that you're getting this so low. The company has grown since then, and the PE ratio was down to about a 10 to 12 on a software growth stock. Great opportunity there, folks. And again, this is one of those that I highlighted in this game plan over the last month or two a couple times as a good opportunity. And today it's paying out beautifully. So beautiful situation there. All right. In terms of a trade, would I short this? No way. All right. Are you going to have resistance at 35? Yes, 35 to 36. It is so beaten down. This has short squeeze written all over it. So I do not have the guts to short this, at least today. I will let the dust settle. I will reevaluate. I'd be more likely to let it pop today than pull back, maybe make a bull flag and actually buy the bull flag if that pattern formation is created. Viva Systems here, gapping up here. If we see it here on the intraday, it's coming back in a little bit. Same kind of deal, though, like Trade Desk, where, again, it was at the low end of a chart, right? So, yes, it's gapping up. If you're aggressive, there is a shortable level here. It would be 215, and there's a gap fill at 218. So right in this vicinity, pivot low, gap fill right there. That would be aggressive traders could look to day trade this on the short side. Sienna falling on earnings. Where do you think this stock was? Was it near all-time highs or near all-time lows? Obviously, I think we can all assume if it's falling on earnings, it probably was towards its high, and you'd be right. Look at this chart, guys. Again, they literally would have had to cure cancer for this stock to go up. I mean, and again, I'm being facetious in that sense, but the idea is that when a stock goes vertical for this long, there's almost no way for a company to report good enough earnings because expectations are so high because the stock price has gone so high. It's almost inevitable that you're going to see a correction. It's not, listen, there's no such thing as 100%. But what I've said going into these earnings that there's an 85% chance it goes down, only a 15% chance of going up on earnings. Yeah, absolutely. And it fell beautifully this morning and is falling. Now, what about a buying opportunity? Well, number one, it's way extended. So you got to let this thing come in dramatically. For me, oh my goodness. I mean, maybe somewhere in this vicinity for a day trade around 260. But again, the odds of it coming down that much are probably pretty scarce. All right, then we turn our attention to JD. JD is a Chinese stock down on earnings this morning. It is at the lows of the day. It's also towards the lower end of the chart. So this is one where I actually would consider a day trade because it's already beaten down. First level I would start to be interested at would be around $24 on JD. And you can see that pivot low right there. If we extend that out as well, you can see it comes right through this area in here, which also acts formally as resistance, right? So resistance, it tried to get above, finally did, then it became support and then went off to the races. If it breaks through there, it could go honestly all the way down to about 2140. That would be your gap fill. That's a huge gap fill down there that would be on my radar. All right. So what we know is less Fed rate cuts, okay, most likely tied to inflation. We're seeing yields go up, which is telling us that the market expectations for inflation are being ratcheted up. And we're also seeing, again, Bitcoin has broken out, which is interesting because it's showing relative strength to the stock market and relative strength to gold and silver. So we'll see if that continues I'll be watching very closely. But on that note, I have to get going to my trading room. As always, if you want to come join me in the live day trading room where we day trade, you see our exact positions, our entry prices, our P&L in real time. All of our alerts are given out in there on a headphone. So you're literally listening to me live, the other traders live. The link is in the description. Check that out. Join us. It's an awesome experience. Even just the education alone you will get from being in there. The discipline, the patience, the technical analysis is amazing. So check it out. It's worth it. You guys have a great rest of your day. Thanks so much for tuning in. I'll talk to you soon. Take care.